Hey folks, Rachana Ranade here, and I welcome you all to a very amazing video which is about reversal stocks. Now you might be like, Rachana, what's wrong with you? There's a reversal in my voice. It's going pretty bad. Suffering from cold and a little bit of fever since last 1 or 2 days. But yes, of course, the show must go on, the learning must go on, and that is the reason why I thought that we should do a video topic which we have not discussed till date so that it brings in a little bit more energy in me. And today we are going to talk about reversal stocks. But why did I think about taking this as a series? There's a reason behind it. If you remember, we had done breakout stocks and we have done 2-3 videos till date, and you all have given a very amazing response for these set of videos. So I thought instead of talking about breakouts, why not talk about reversals? So if we can try and analyze, or if we can try and shortlist few indicators which can tell us about stock reversals, stock price reversals, if we can try out if we can try and find out 2-3 mistakes that people typically do while picking up reversals, if we can discuss that, I think it'll bring in a good value addition to your knowledge. And that's what we're going to discuss in today's video. We're going to talk about three different types of signals for reversals, indicators for reversals, and common pitfalls as well. I'm going to give an example for each, so please keep on watching the video till the end. And if you like this video on reversal stocks, then please let me know in the comment section. Just type out part 2 and we'll be happy to do one more video on this. Now let's move on with identifying reversals with the help of different indicators. And the very first indicator that we are going to discuss is RSI divergence. Okay. Now, for those who have done my course on technical analysis 2.0, they already know about what is the concept of RSI, what is the concept of RSI divergence. But just in case, if you want, I can just quickly tell you what an RSI divergence means. Basically, it means that whatever the stock price is showing as a behavior, RSI shows a different behavior. And that is why we call it as a divergence. They are not showing the same behaviors. But how does it look like? So for that, have a look at this. So what I've done is I've already drawn two examples here so that we save on some time. So this is the case of stock price, the upper half. Okay. No need to draw this actually. And the lower half is about how the RSI looks like in the same time frame. Okay. Now let's say what has happened. Let's say that the stock was falling, and because the stock was falling, here it made a low, gave a pullback, and again it made a lower low. Okay. Now what has happened is that ideally if the stock price is showing a lower low, RSI ideally could have shown a lower low as well. But what has happened with RSI? Let us check. RSI showed a low, there was a pullback, and now it has seen a higher low. So can I say that the trend that RSI showed was different from what the stock price showed? Answer is yes, and that is why we call it as a divergence. If we see an RSI divergence, what does this mean? That is the stock falling? Yes, but the strength, I mean not the strength, I can say the pace at which it can fall, the power with which it can fall, that power is drying out now. So the fall could be there, but the fall would dry up, and soon it may take a support somewhere and would start reversing from there. I hope you have understood this concept, right? So this is the first case where we can see an RSI divergence and where there are chances that it could show a reversal. Exactly opposite. So this is in case of what? Downtrend. Okay. Now, if I were to talk about an uptrend, what could be a scenario? Let us understand. Let's say that the stock showed a high and a low, again a high and a higher low. So what does it mean? Price is going up, stock is showing strength, but is the strength real? For that, RSI should have shown again a higher low. But what has the RSI shown in the same time frame? We can see a low and a lower low. This shows that the strength in the up move is missing, and there are great chances that this strength could dry up soon and we could see the stock topping out and reversing from there. Okay, that is again a sign of reversal in case of an uptrend. You'll be like, Rachana, we have understood all the drawings, can you give us a real life example? So of course, why not? Let's take the example of arcade developers. Okay, so recently a comparatively recent listing you can see here. This is September 24th, and what you can see here: low, high, a lower low, again a lower high, and again a lower low. So if I were to just draw these, and if I were to just join the lows here, very clearly you can see that a lower low has been formed in the price. So is the price showing weakness? Yes. Is the RSI showing weakness? So for that, let us just take RSI into a half screen zone, and let's say from here in the same time frame, from here T, let me draw this till here. Okay, can you very clearly see that the price has formed a lower low, but RSI has formed a higher low? And this means that the pace at which it was falling, the strength which it was falling, that is drying up now, and there could be signs of bottoming out and there could be signs of reversal. Now, what is the problem here? Many people feel this is it, this is the bottom, and immediately people would want to buy somewhere here. This is the mistake that people may do, taking a position just based on RSI divergence. Ideally, try and get more and more confirmations, and one simple confirmation could be, is the previous swing high broken or not? See, this is the previous swing high. If this is also broken, you can see here, obviously the stock had stopped there for 1, 2, 3 days, and then 4th day it showed good signs of strength, right? So this is also what we have to ideally check, is the previous swing high broken or not? If yes, then again there are great chances that it may continue its journey. Okay, I'm giving you a few examples while I teach these concepts, so that whatever concepts I'm teaching you in theory, I can also show you a practical application of these. Okay, so again I'm repeating, whatever examples I'm taking are examples and they should not be treated as stock recommendations. Now let's move on with the second concept of identifying price reversals, but this is based on the concept of price action analysis. Now, let me tell you a very interesting fact about this price action analysis. I'd taken this up as a challenge for my Invest in India community members. And when I run this price action analysis challenge with them, they were like, oh my God, we are really happy with what we got to learn in this. So all of them requested that if you could get a price action analysis 2.0 challenge. I brought that in front of them, and then they said, we are still wanting to learn more and more on this. So it would be great if you could come up with a separate course on price action analysis. And as a teacher, it feels really good that if students by themselves demand something from the teacher, that we want to learn this, if you could, draft a course and tell us or teach us, it'll be much more fruitful. And that is where me and my team members, we sat down, we discussed what could be the different concepts that could be taught in this. First and foremost, a lot of people may get confused that we have already done the technical analysis 2.0 course. If you have already done that, what is the difference between technical analysis 2.0 and price action analysis? I'm just going to tell you top 2 differences, right? So in technical analysis 2.0, I've taught about swing trades. Of course, everyone knows I am totally in a position of something like intraday trades and all that, but yes, I do believe in swing trades. So I've taught about how can you take swing trades based on technical analysis. But in price action analysis, we have focused on how technical analysis can be used even for longer term trades. So that's one big difference. Second difference is that in technical analysis 2.0, I've talked about candlestick patterns, chart patterns, indicators. I've taught all of these. But in price action analysis, we have gone into the logics of the candles. So for example, if I were to say that, okay, this is a pin bar or this is a hammer, then what is the logic behind the formation of this hammer or formation of this pin bar? All these logics based on demand supply analysis is what we have covered in price action analysis course, and we have titled that as Decoding Price Action Analysis. Now in this course, as I mentioned, I have already talked about the the differences between technical analysis and price action analysis. But in addition to that, what are the key pointers that I've covered in this course? Number one, I've talked about buy, add, sell system. So many people understand when to buy, but they don't understand when to add. That is what has been covered. When to sell, okay. How to set stop loss, how to trail stop loss has also been covered in this course. Second, how sectoral rotation works, that has been covered in this course. Third, we have talked about a very, very interesting concept which is called as stage analysis. That is what we have covered in this course. One more super interesting point, how do you trade in bull markets versus how do you trade in bear markets? These points have been discussed in course. Concept of core satellite portfolio, concept of VCP. Okay, enough. I'm not getting charged. Loads of things discussed in this course. And if you want to learn this amazing concept of price action analysis, I think this is the right time. Don't forget to enroll for this course. The course is set to release, that has already been released, in fact, yesterday, that is on the 5th. On the 5th, the first 4 lectures, it's a total 7 hours course. So first 4 lectures have been released yesterday. Tomorrow, that is on Saturday, balance 3 lectures will be released. So with that, The entire course will be in front of you by Saturday, by tomorrow. And anyone who wishes to binge watch this course instead of binge watching a Netflix series, I think that would be a good option for you all. This is the introductory offer price that we have launched. That's like an early bird offer. And anyone who wants to enroll, please visit our website, rachanaranade.com. No need for any coupon code. This is a direct introductory offer after, and that's the validity for it, by the way, after which our price will rise. So as I always say, don't think twice before investing in knowledge. This is the right time. Okay, now with that, let's move on with the stock, which is GRSE, and that is a concept that I'm going to teach based on price action analysis. And for that, have a look at this. Now I'm on the monthly candlestick of GRSE, and if you see here, right from October 18 till almost Jan, Feb, March 22, the stock was in an absolute sideways trend. Barely there were any volumes, barely any interest in the stock. This is where we can see 2-3 back-to-back volume shoots and backed by some price rise as well. It may not seem very big here, but if I were to just tell you how much was the price rise in just these 3, 4, 5 months, from here to here, this is almost 147% rise in 1, 2, 3, 4, 5 months. And if you can see here, the volume has also been increasing in these 5 months. So always remember, a price rise backed by a volume rise shows strength in the stock. Okay, can we see a repeat telecast here? Yes, absolutely. 1, 2, 3, 4 candles back to back. We can see a price rise and backed by even good volumes. What do you see in this last leg? 1, 2, 3 huge, 4, 1, 2, 3, 4, in fact 4 back to back huge green candles and backed by a very good volume. So that again shows that yes, the strength was absolutely there in the price rise. But what happened here absolutely at the top, we can see that the upper wick is also pretty big, and from here actually the selling pressure started, which continued for next 1, 2, 3 months back to back. Now I want everyone to pay attention on this very important point, that though the stock price has been falling, I mean from this topmost point till this bottommost point, the stock is corrected almost like 50+%. Okay, barely 4, 5 months, the stock is corrected almost 50%. But this fall, these red candles, you can see the volume as well. Now look at the buying volume and look at the selling volume, and that shows that the strength in the sellers is not that high as compared to the strength in the buyers. Okay, so somewhere there could be chances that the sellers may get tired at one point in time. They may stop selling actively, and that is where the buyers could step in. Now here you can see that a pin bar or a hammer has been formed towards the end of this down move. Now, again, as I mentioned, right, in the price action analysis course, I've also talked about the logics behind this hammer candle. Now, the moment many people see this hammer candle, they are like, acha, reversal done, I'm going to buy. No, no, wait. One basic mistake, that's what people do, is that ideally what we should do is we should draw a line here just at the high of the pin bar, at the high price of the pin bar. If the next month's candle closes above this level convincingly with volumes, then I can say that yes, this could be a sign of a reversal. Okay, so I hope you have understood that only pin bar is not a reversal. We should wait for a confirmation, and confirmation, when will that happen? When the price closes above the high point of that pin bar and also accompanied by good volumes. Okay, so I hope you have understood how to identify a reversal based on price action analysis. But I'm sure there may be many people who have some other defense related stocks in your portfolio, and that is the reason why I have also written a blog on our website rachanaranade.com, which is about 2 or 3 more defense stocks about how to identify reversals based on price action analysis. Repeating one more time, all these are examples. Please don't take these as stock recommendations. Now let's move on with the third methodology for identifying reversals, and that is based on gap theory. And for the explanation of the gap theory, I'm going to take one more example, which is of Tollins tires, and for that have a look at this. Now if you see here, the stock is a comparatively recent listing, listed in September 2024. You can see the first month the price was solid, the volume was also good, but post first month the stock started to see a good selling pressure. But the point to be noted is that though the price has dropped pretty much, you can see that the sale volume is not that great, right? After this, we could see a big green candle recently, that is on the 26th of November. This is a 20% upper circuit kind of candle, and you can see that was also backed by good volumes. But what is more interesting is what happened on the immediate next day. After this 20%, we could see a gap up candle. So I'm just going to draw a small line here so that, okay, so that we can identify, okay, so this was the gap that was created, right? Now let's also check what was the volume here. You can see here this gap up candle volume was also amazing. The stock went in a sideways trend for 2-3 days, and then what happened is we call this as a classic gap filling theory. So as per the gap filling theory, it is said that if a gap is created, typically the sellers would put some pressure and the gap would be filled. If the gap is filled at that point in time, buyers again become active and they take the stock price higher. If the sellers still become more and more powerful, there is a chance that the gap is not only filled but the gap is cracked further and the stock could see further selling pressure. What has happened in this case? In this case, the gap theory has been honored just by few paise. I think the gap has not been filled, but that is absolutely okay. After which we could see that yes, the buyers became active and the stock price rose almost 3% on that day. And today, as I shoot the video, the stock is already up 5.5%. The stock is up with good volumes as well. Now, could we see one more gap? The answer is yes. On the immediate second day, you can see that yes, there was a gap which was created, and this has also been filled in the last 2-3 days. So all in all, good signs of gap. Whatever gaps were created, they have been closed now. Volumes, you can see these selling volumes versus these buying volumes, again very clear signs that yes, buyers, the price is being taken upwards with volumes. Now I can see something more. Not only gap filling has happened, this is called as an IPO base formation breakout. That has also happened today as I shoot the video. It is very important that the stock should close above this. And then we can say it's like a IPO base formation. Again, this concept has also been taken in detail in our price action analysis course. Now, coming to the grand finale, which is a homework. Now, what you have to do is you have to check the chart pattern for Raymond Lifestyle. Study the chart, Raymond Lifestyle, and you have to tell me whether there is a reversal that you can identify in the stock based on either of the 4 of the parameters. Number 1, can you see an RSI divergence? Number 2, can you see RSI divergence but confirmation is pending? Possibility number 3, is it based on price action analysis? And possibility number 4, kuch bhi, there is no reversal. Okay, so it's like a kaun banega crorepati, A, B, C, D. What you have to do is just tell me in the comment section A, B, C, D, what is the right answer according to you. I hope you have enjoyed this new attempt of mine wherein I discussed about reversals. And if you did, please tell me your feedback in the comment section. If you like it, I would definitely love to do a part 2 of this reversal video series. If you love this video, share this video with your friends. If you have not yet subscribed to our channel, please subscribe to our channel and smash the like button. I'll see you in the next one. Till then, take care. Jai Hind and bye-bye. You might have come across such advertisements on various social media platforms. Please note, all of these are fraudsters promising unbelievable returns through stock tips. I don't provide any calls or advisory services. I provide only educational content through my social media handles and through my website rachanaranade.com and rachanaranade.in.